Welcome to the 2025 Economic Depression and Preparation channel. Thanks for joining me on Preach to Me channel. Thank you for my subscribers, to my viewers, ladies and gentlemen. We're heading into the late third quarter, fourth quarter of 2025, and things are getting very interesting on the economic front. We want to talk about the possibility of 2 additional rate cuts by the Federal Reserve Bank and what that means. Also, we're going to be talking about gold topping 4,000, silver almost up to $50 per ounce. Everyone can get in on the action. Crypto's up. Everything is up. It's a melting up economy right now as the dollar continues to lose purchasing power and value. So that is the case here that we're facing here in all major cities. And also with that, as you know, there's possibility of more civil unrest in our beloved United States as the conditions continue to worsen here in the next year, when we officially, the media and the news may officially declare that we're in a recession next year, sometime either the first and second quarter of that. So the divided Fed here, officials saw another 2 interest rate cuts here by the end of 2025. The minutes show the Fed officials in September were strongly inclined to lower interest rates, with the only dispute seeming to be over how many cuts were coming. Meeting minutes released Wednesday showed. So you can see here, but why would you be cutting rates, ladies and gentlemen, in a stock market that's booming, supposedly, and you have all this free money sloshing around among the top 1%? So officials grew concerned about the state of the labor market, which they saw weakening as upside threats to inflation continued. They still expected to ease back the 2% target. Now, we know inflation is well above 2%. It's more like 10%, 12%. We know that unemployment is well above the 4.5% number that they give us. Statistically, unemployment or underemployment is at 10 to 15% guaranteed here in America and other countries as well. So you can expect another rate cut from the Fed, but it's not going to do much because rate cuts can only affect monetary policy. With fiscal policy, you can't get people to spend more money if they choose not to. If they choose belt tightening is going on around America, and different things like that is happening as well. So with this government shutdown, it's going to affect some things too. Is less spending in these downtown areas. Many people commute to work. Many people, for those who are lucky enough to work from home, maybe it won't affect it as much, but we just never know. Consumer outlook sours as inflation continues. Expectations rise. New York Fed survey finds. So the Federal Reserve Bank has got the 2 rate cuts lined up, for maybe October and December, October, November, whatever combination they choose before the end of the year. But what they don't have lined up, people are expecting more money printing to happen, but the money printing this time is going to be between banks, much like what happened in 2008 when the bank bailout happened. And this is what people are saying. Well, if they do all this printing between banks or bailing out another industry, that means higher prices for us for longer in all areas. And the prices hadn't come down this year since January at all. You and I know that. Gas has come down a little bit, but that's inconsequential when other bills have risen significantly higher here, such as food, transportation, utilities, rents, insurances, prices on various insurance products. And so this is what we're facing. Many Americans have expressed worries about rising prices and the effect of President Donald Trump's tariff policies. Few have changed their spending habits yet. Up until now, experts say this is what has helped the U.S. avoid a significant economic slowdown. But the spending will dry up going into the first quarter of 2026. And this is going to be a bleak holiday season for retailers, for many people here, and many people are feeling that. That's why gold is up to 4,000 for the first time, fueled by the U.S. shutdown. So gold is topping 4,000. Silver is almost up to $50 an ounce here as people look for safe haven assets, hardcore assets like gold, silver, land, oil, commodities, things like that. Hardcore assets is what you need. Things that can be turned to liquidity in times of crisis, in times of alleged chaos. So gold breaking 4,000 is a quote. Gold breaking 4,000 isn't just about fear. It's about reallocation. Exactly what I just said. This is Charu Chana, strategist at Saxo Capital Markets, PTE. With economic data on pause, he goes on to say, continued, and rate cuts on the horizon, real yields are easing, while AI-heavy equities look stretched, quote-unquote. Central banks built the base for this rally, but retail and ETFs are now driving the leg. So in other words, retail and ETFs, retail stocks are going down. So people are going to the safe haven, the tried and trusted, true, real money that we used to use before we got off the gold standard. So is the U.S. economy getting weaker? Here's what we know. This is according to MarketWatch.com. GDP suggests the economy is okay, but the look under the hood shows more signs of wear and tear. Less people are spending outlet malls. Most people are spending online. As we continue to see the U.S. economy go down, we're going to see less people spending. And that in turn, they don't want deflation. So what they're going to do is they're going to print up more money to give to the banks. They're going to print up and lend between each other and all of that. And it's going to drive up the cost of doing business for everybody. And that means more layoffs for these small companies when they're supposed to be creating jobs and different things of that nature as well. So let me know what you think in the comments. Is this going to be good for is this economy going to be able to recover in 5 years and 10 years? Or is this the end of the road for the U.S. dollar and capitalism as we know it? Let me know what you think in the comments. God bless. Take care, ladies and gentlemen. Be sure to share this video and subscribe if you can. And I'll see you in the next episode. Thank you for listening.